Hello, everybody. This is the Tesla pre-earnings analysis and prediction report. This is StockerFinance. I'm your host, David Scheuer. Make sure to follow me on Twitter at StockerFinance. So, first up, let's hop right into the numbers here. We got the Wall Street consensus versus my consensus. So, auto revenue, as you can tell, I've actually predicted it to be significantly higher. And I'm going to explain that a little more later on in this analysis, but it really has to do with China sales and deliveries as well as Tesla's order backlog that I think people are really overlooking. Other revenue, which for Wall Street, I'm assuming it's just energy, services, etc. I think they have it a little too high, and that's because I think services is actually a pretty significant chunk of Tesla's the other revenue from Tesla, and I just don't think anyone's going to want service done right now. I think people were really afraid, and even if their car needed service, we're just keeping it in and not going out because they didn't want it to be, touched by other people, etc. And I think the energy is probably staying about the same, but it's kind of hard to measure that one as well. So with total revenue, mine's actually a little higher just because of my jump in auto revenue compared to the Wall Street consensus, and that again is mainly based off of the order backlog that Tesla has, along with China sales just surging in the past couple months. Then gross margin, my margin just slightly lower than Wall Street's. That's simply because the Gigafactory in China is just getting started, and generally when you just get started and you're starting to ramp up, especially with starting to ramp up the Model Y, the margins are going to be lower before they start, really mass producing everything. So that's why margins are a little lower, just because they're just kind of beginning to produce stuff and ramping up the Model Y, and as well as the China Gigafactory starting to ramp up. So I think gross margin is going to be a little lower than what Wall Street thinks, but we'll see what happens. So now we have operating expenses. I put it about the same, to be honest. Slightly less. I mean, it's hard. It's hard to say. It is hard to say, but yeah, I don't know. I think it's pretty similar. I mean, this is just so hard to just say, just because of what happened with the coronavirus. Operating expenses would be significantly lower because they're not going to have as many workers, since they had to furlough a bunch of workers, but now they're starting to bring them back. And so it's going to be really interesting to see how that one plays out. Operating income, about the same. I don't know, not too much to say there. Free cash flow, I think it's going to be significantly less, negative 1,000 compared to theirs, and that's simply because of how much money I think they're spending on ramping up the Gigafactory, as well as they started the Europe Gigafactory. So I think that's going to be less than what Wall Street thinks. And then capital expenditure, about the same. And again, these are just kind of, I'm not really doing any mathematical modeling or anything crazy like that. I'm just kind of generally looking at their estimates and just kind of adjusting it according to what I personally believe. So there's not too much math behind this. There's not too much modeling or anything too fancy. It's really just my opinion and kind of where I think it lies. So these numbers are definitely going to be wrong. I think the Wall Street consensus is absolutely going to be wrong. I think mine's absolutely going to be wrong as well. But we're going to see who's closer. It's going to be interesting. And so I personally think Tesla's going to do a little better than what Wall Street thinks and what everyone thinks. And I'll talk about why in a bit here. So first off, let's talk about auto. And everything I have to talk about here really has to do with China. I mean, remember that coronavirus cases peaked in China in late February. So let's go ahead and look at that. So we have the active cases here in China, number of infected people. And it peaked around February 16th, which, if you know, I guess it was Black Thursday or something, as we could call it, when the market just tanked like 20% and then eventually about 30 to 40%, around 30% actually. And that was around February 14th. So it really hit the U.S. market, and the U.S. went into a state of emergency around February 14th, and that's when the cases in China peaked up and have since been declining and leveling off. And we have the total cases here again leveling off, and the total deaths starting to level off as well. So it's really interesting to see this here. And obviously, we don't know if China's reporting these numbers honestly. It's hard to tell, what they're reporting to us and etc. But as far as we're concerned, based off the data we've been provided, deaths, cases have all leveled off significantly, and China has really opened back up. And we've seen that with the Tesla Gigafactory in China, pretty much fully operational. So if we go back to this slide here, we can also tell, we also knew that there was record China sales in March. Over 10,000 vehicles were recorded to be sold in China, 3,900 in February. So to have over 14,000 vehicles reportedly sold in China during the coronavirus is pretty incredible, and for that to be ramping up so significantly, I mean, from January 2,620 to February 3,900, and then March 10,160. So a massive increase in sales. It's just going to keep increasing, and it's gonna be interesting to see what it is in April as well. And that's based off the CSPC or CPCA data. Can't fumble in my words there. And another thing that was reported was registrations peaked in China, specifically in March, up 450%. And we can kind of relate that to the sales there as well. 3,900 in February, and then 10,160 vehicles in March. So despite the coronavirus, and as I said, if we go look at these cases and active cases again, despite it peaking in late February, which generally when it peaks off, it means people are probably going to be more afraid, staying inside. And China, with their regime going on, it's hard to tell how strict they were being, what they were implementing, etc. So, with it starting to level off, but it peaking around late February and then into March, it's really incredible that there was just that many registrations and that many sales, and especially for it just be climbing like at that rate in China is pretty incredible. And so I think it's going to be a really underrated factor. So here's just kind of a little report by Reuters here. The U.S. electric vehicle maker Tesla, China car registrations jumped 450% in March, month on month. Data from auto consultancy, that's just saying where the data's from. Tesla's China registrations rose to 12,709 units in March from 2,314 in February. That's incredible. So during the peak of the coronavirus in February, it climbed throughout March to 12,709 units, a 450% gain in registrations. That's pretty incredible. And overall auto sales in China plunged, though. So despite auto sales plunging, China's been increasing its sales in China and increasing its registrations, and not slowly either. I mean, 450% is pretty incredible for ramping up in China from a new gigafactory with a, starting to, they recently released the not newer Model 3, but the modified Model 3, the longer range one. So multiple different variations of it. To be ramping that up during the coronavirus and with a new gigafactory that's just starting is pretty incredible that they're increasing at that rate. So Tesla was starting delivering cars from its Shanghai factory last year. Said last week as started China sales of 2 more Model 3 variants. This is what I was talking about, the other Model 3 variants built at its Shanghai plant. So what about the USA? What about the US? How are they doing? It's going to be really interesting because, as I said, I was really focused on China, but a lot of people have been looking at the US specifically with, 2 of Tesla's factories almost fully closed. They're still doing necessary operations, so they're still producing some cars, but all unnecessary workers were furloughed. But I think there's just such a massive order backlog that I've talked about in the past couple of videos, which has allowed Tesla to continue to deliver vehicles and outperform analyst expectations. And we saw this with the last delivery report between January and March. Tesla delivered around 88,400 vehicles, just blew analyst and honestly mine and almost everybody's expectations for what we thought Tesla would deliver during that time. And that's in the US. I just think because it's such a massive order backlog, most people who purchase a Tesla aren't going back and canceling that order. And they're going to continue to just knock out this massive backlog of Model 3s. And then they're working on Model Ys as well right now. And I think the Model Ys is really what's been helping them out as well. Because they're not just delivering Model 3s, they're starting to deliver Model Ys, and this ramp up is really serving Tesla well, and I think it's especially going to serve them well this quarter. So, the order backlog will allow Tesla to maintain its deliveries and catch up on orders, and I think this will also result in a less than expected sales/delivery slump, which people seem to be expecting to happen. So, what will Wall Street be looking for? This is the tough thing with earnings reports. You never know what Wall Street's going to be looking for. Every single part of the report could be, almost every single part of the report could be good. You could have, revenue was significantly higher, guidance looks good, but the EPS is that they missed EPS, so the stock plummets the next day. Or it could be EPS is good, earnings were amazing, they destroyed everything, but guidance is bad. Well, I really think what Wall Street will be looking for in this case is guidance. And I think that's what, not just for Tesla, but the whole market and I think most people's earnings in general. They expect low/underperforming sales, and a lot of that was priced in earlier. And they expect, low sales numbers, lower than, not very good earnings numbers. But they really want to know about the future of Tesla, as well as the future of the economy in a whole and related to anybody's earnings. But specifically for Tesla, I think they're going to have good guidance. And let me tell you why. So here's my expected guidance for Tesla. Now I have my expected guidance, what I expect them to say when talking about guidance, and I'm not really including numbers here, just kind of news that I think they're going to announce. And then I have the unexpected but still possible guidance. So I think the expect is they're going to say U.S. factories are going to be fully open sometime in the near future, and workers are going to be returning much sooner than was expected. We already saw an article recently that said furloughed workers were returning to the Fremont factory. So I think they're definitely going to talk about that and how their factories are going to be starting up, and I think it's going to be a lot sooner than what Wall Street expects. Then they're going to probably just mention that the China Gigafactory is fully up and running and has been for a little bit. I think that's not going to be much of a surprise, but it is some expected news there. I also think they're going to have higher than expected sales/delivery guidance. And again, I'm not giving specific numbers because it's just so hard to, I guess, give that out. And honestly, I'm not going to use any mathematical modeling to try and predict that, but I do think it's going to be higher than what most people expect, especially for China. If they perform that well during the coronavirus in China, just imagine now that China has pretty much leveled off and is starting to go back to normal life, at least from what they're telling us. I think sales and deliveries are going to skyrocket there, especially with the Gigafactory in China fully up and running. And I think Tesla Solar Energy, which I haven't really talked much, I think it's going to basically just be on track. I really don't expect it to be taking off or any surprises there. I don't think it's going to be super exciting, but I think it'll be on track, doing well, performing well, and I think it'll be growing. I know this is kind of supposed to be Tesla's a year for solar energy, but I think it's really hard to say. I just think a lot of people are trying to save money right now, and I think a lot of people aren't going to be, installing solar panels at the moment, but you never really know. Perhaps an apocalyptic scenario, I guess, as some people see it, could maybe give them an incentive to get solar on their home since they'd be not as reliant on the grid. Anyways, here's unexpected but still possible kind of news that I'm expecting from Tesla when they're talking about guidance, or perhaps when one of the an analyst or someone else or a retail investor asks them a question. I expect something to be about the Cybertruck. I know someone's going to ask a question during the call about the Cybertruck. It's going to happen. And I think they're going to say that the Cybertruck is actually going to start production sooner than expected. We saw that cities were starting to give incentives to Tesla to open their Cybertruck facility. We had one that was basically giving them land for half off, as well as major tax incentives. They're also saying how their minimum wage was lower, which would save Tesla like $50 million a year or something. So I talked about that in the last Tesla Tuesday. But I think they're going to mention a little bit about the Cybertruck. It'd be kind of unexpected for them to say that production to start sooner than expected, but I think it is possible. So this would be unexpected, but still possible news. Some other news, I really, I doubt they'll touch on this too much, but I wouldn't be. But if they did, I think it's another possibility during their earnings call, just from someone asking a question. And that's going to be the Europe Gigafactory. So we've kind of seen some, at the Berlin factory, we've seen some pictures and videos of them, under construction there. It's coming along, but I wouldn't be surprised if they say the completion date is either going to be sooner than expected, or on the other hand, is going to be delayed. But again, construction was deemed a necessary, what do you call it? A necessary work. I know I'm not saying that correctly, the correct term, but construction didn't stop. It was deemed a necessary thing, at least here in the States, and I'm pretty sure in Europe, construction continued on as well. So we'll see what happens there. I don't know if they're going to say sooner than expected. They could just say on track. There's really no tell there, but I think they are going to mention something about the Europe Gigafactory. It seemed kind of weird if they didn't mention anything about that. Next up, the battery. There were some mentions about the million-mile battery. They recently patented not the whole battery. There was some news saying they patented a million-mile battery. That's not true. They patented a part for the million-mile battery, which is still great news, but it's not what a lot of people were saying. But I wouldn't be surprised if they mentioned something about that. Even though Battery Day is coming up, so they might just skip over that. As well as there's got to be some questions about the Tesla Semi and 2020 Tesla Roadster. I mean, it's called the 2020 Tesla Roadster, and I haven't heard a thing about it. So it's going to be really interesting to see what they say about that. Is it under production? Is it going to be more like the 2022 Tesla Roadster? There's really no tell. Last time I heard, it was just kind of put off to the side as they ramp up Model Y and Model 3 production. And then I actually think they're going to say something about full self-driving being released sooner than expected. During an interview with Elon Musk that I watched, I forget which interview it was. I think it might have been Third Row, the Third Row podcast with Gally from Hyperchange, as well as some other Tesla YouTubers. but I'm not sure if he mentioned it there. It could have been somewhere else. So I think he said though that full self-driving could be released kind of as a beta, I guess, in a way, at the end of 2020, or actually earlier than that as well, by this summer. So that's going to be really interesting. Obviously, it's on Elon time, so I'm definitely expecting it to be a little later than what he said previously, so probably early 2021, end of 2020. But that could be massive, especially for Tesla's rideshare program, and we'll see if they mention anything about that as well during the questions part of the earnings call. So how do I feel about analysts right now? Well, I think they're overlooking China. I think they're not realizing Tesla's order backlog that's accumulated over the years and that it's now been, just knocking out. And that's a huge advantage to Tesla compared to other automakers. Other automakers, they produce these cars, put them on lots, and they just kind of sit there. There's not this massive pre-order backlog that Tesla has. So Tesla's just simply, racking up, knocking out all these deliveries that they've had to do, so that now when people order Model 3s and stuff, they won't be waiting for weeks because Tesla will have knocked out a lot of these orders. And I think they just have such a massive order backlog that their sales and their deliveries really aren't going to decrease too much, or not as much as analysts are expecting. I also think they're not fully appreciating Tesla's massive lead. Coronavirus is actually strengthening the Tesla lead, and that's basically for the reasons I just stated, just because of Tesla's order backlog, the fact that other auto companies, they really do a lot with leases, and people aren't going to be paying their leases or aren't going to be wanting to, etc. So, and also just the massive amount of debt that legacy automakers have compared to Tesla right now. So, anyways, I just think Tesla's lead is increasing. And they're just getting farther and farther ahead, and it's pretty incredible to see. Again, just a reminder that numbers are almost always wrong. That's kind of why I avoid giving too many numbers to people. I just don't want people to base everything off numbers, because there's really no way for anybody to tell unless they have inside information. We've got deliveries reported. There's some sales speculation, registrations from China, etc. But a lot of it's just speculative. It's going to be really interesting to see what Tesla says. But it's almost 100% chance that my numbers are wrong and that the Wall Street's are wrong. It's just more of how I think Tesla's going to do. And I personally think it's going to outperform what the analysts are thinking Tesla will do as of right now. So, I also want to just mention here the Tesla earnings call will be live streamed here on this channel. I do this for every single Tesla earnings call. It'll be reported tomorrow, which is the 29th of April. I'll be live streaming it here on this channel. It'll probably be up some midday tomorrow, so you can kind of be waiting for it to happen. And so yeah, if you're looking to find it or listen in, go ahead and just come to this channel and you can find it. Subscribe, and thanks for watching. If you have any questions, please let me know. I'd love to discuss how you think about my report, how you think about Wall Street, and if you have your own as well, I'd love to hear it. Anyways, this is StockerFinance. My name is David Scheuer, and I will see you in the next video. Peace out.